Good morning. Welcome to the Brew. I am your host, Lex, and today we're going to tackle a new ETF, QQQY. I think Mark's going to be the expert, so it's Trader's Workshop today. We're going to get into this very interesting product that we're going to break down. So let's get right to it on the Brew. Good morning, boys. How are we?
Good morning, Lex. Good morning.
Good morning, Lex. How you doing? You got an interview later?
I got an interview later. Yep. How do you like this? Now, this looks good from here up. From here down, not so good. So I got to stay seated. Just saying.
So I hope it's a Zoom
Can't
interview.
wrinkle the pants, Lex. Can't wrinkle the pants.
Now, if I had pants, that would be interesting. Okay. All right. How you guys been? Good. Good. Glad to hear.
Yeah, no, I was waiting for Mark to talk.
Oh, you got to just get into it. All right. So let's do it.
Good.
QQQY. It is the ticker for this new ETF. Mark, I'm not even going to try to set it up. I'm going to let you set it up because you're the one who sort of brought this to our attention. So tell us about this product. What's going on here?
This product is the most derivatives zeitgeisty product ever. It is like everything you could possibly ask for in an options ETF, combined with the mania of zero DTEs. So the QQQY, every single day, go out into the at the money NDX options and just sell them and just whack the at the money options. They take out all the open interest. They are the open interest, and they just whack puts.
They do. So just puts though, right?
Yep, short puts. So
okay,
short
so they
put, zero DTE at the money trade.
So it's like this massive cash secured put strategy of sorts, right?
That's exactly what it is. They got a bunch of cash in the bank. They own some bonds for the rest of it, and they just sell cash secured put at the money NDX cash secured puts.
Okay, so but that's on a zero. They just sell the zero DT. The ones expiring today, they keep just waxing those things, right?
Yeah, so technically they actually will sell it at the close on, so today's Thursday. They sold the October 12th expiring NDXs yesterday afternoon.
Okay, so near the close they sell this stuff.
Correct. They sell the next day near the close. So they get the benefit of the overnight decay too.
Right. And then do you think that as these things decay the next day, and if they ever reach zeroness, do they buy these things in, or is it just a straight let them rip?
That's actually a really good question. I can only have been tracking what they post on their website, but I don't know if they just totally let them expire or if they have some like take profit methodology. Presumably they have to buy in the shorts. They're not taking delivery. Well, it's cash settled. So
That's
right.
settled.
Yeah. So and you can get information on what's happening on their website, which I think we can run across the screen here. So that's the website. What is it? DefianceETFs.com.
Correct. They've got a couple other interesting ETFs in their stable, but this is quickly up to, I think it would launch with about 50 million in AUM, and I see it today with just under 70. So it picked up some assets pretty quickly.
Yeah. So okay, how do you trade it? What do we do? The retail folks or the professional folks? What happens here?
So I think the most interesting.
Mark zoned out here.
Interesting thing about just secured put is, oh no.
Yeah, you were flipping around like a fish on the wharf.
Oh man, I'm okay. Am I back now?
Yeah,
you're back on land.
You're back.
Okay. No, I think the most interesting thing to me is how aggressive these puts are. I mean, like when you typically think of selling a cash secured put, do you think of the 50 delta put, or do you think further out of the money?
No, I think of the 32 delta put.
Agreed. 25, 30 delta.
He's flipping again.
Yeah.
I think that's a sweet spot.
I'm actually interested while he's frozen. NDX options, like the index options, and now he's not frozen anymore. So now I feel like I interrupted him. But NDX options are so illiquid that you would think that they would figure, maybe do it with SPX or QQQ at least or something like that.
I agree 100%. I was going to ask Mark that as well. Yeah, why NDX? Mark, when we traded NDX, it was on the SIBO floor, and I never traded it. And we had someone in there. but it was pretty active then. I don't think it's the NDX pit is nearly so liquid as it once was. Is that right, or am I missing something?
No, I completely agree, and I have a sort of answer for I think why.
Okay.
But as like a relative measure, like my liquidity index ranks SPX typically 400 is low, 650 is like high, like a 700 would be high.
Mm-hmm.
NDX scores in like the 50 to 100 range.
Oh.
So like that's less than an Apple, that's less than a Microsoft, that's less than like, you know, your top 10 single equities. You know, SPY's over 500.
Right.
So NDX way down there.
Well,
So
NDX also that's on the
Mhm.
Philly exchange, and only Susquehanna can make that market, right? So that's why it's so illiquid. They have a monopoly.
Yeah, I don't know the answer. I thought NDX was, well, you know, NDX was listed on SIBO, and I don't know if it was a SIBO product like SPX was or is. I don't remember, but it might be multiply listed. And I think Susquehanna was the specialist, the DPM in NDX back in the day. And there's no reason for them to give it up. So, which leads to the next question. If Susquehanna, and I'm not saying they're bad guys, comes in and knows that this trade's happening every day, I know what I would do as the market maker. I'm just saying they're gonna pay dearly or sell cheaply that put if I know it's
These
coming
markets
in.
are already decently. I mean,
Yeah, go ahead, Mark.
Nah, he's frozen again. Oh, not anymore.
He's paying.
yeah, I mean these markets are like $2 and $3 wide. Like it's, you know, decent market. Am I still frozen?
No, you're moving a little bit. You know, it's like you're like doing that Dougie step or something like that. You know, just like
I used to do that.
yeah, or Doogie. I don't know what it's called.
You know, we need that French internet. Come on, bring back the French
Yeah, where's
internet.
the French internet? Jeez,
I literally had the optimum guy over last night. I was supposed to be better.
All right. No, but so Mark, come on. Susquehanna knows it's coming every day. Aren't they kind of lowballing this bid?
Happily. And I think, yeah. And I think the funds, honestly, like given the illiquidity there, just them getting out on the bid is decent. Like, you know, all things considered.
Yeah.
But I think to your original question, I suspect they trade this because of the 60-40. That's why they're trading this over the Qs.
Okay, so 60-40 meaning, go ahead, just explain it so we know what we're talking about.
Because these are Section 1256 contracts that everything's marked to market at the end of the year, but your gains and losses get to be allocated 60% long-term, 40% short-term.
Right, and you get that treatment with cash settled sort of indices typically, right?
Correct.
Okay.
So that's why I've seen them play around in XND, which is the micro NASDAQ. That's even less liquid than NDX, though.
Okay. So as an investor in this product, QQQY, what am I doing? Am I just buying the ETF itself? Are there options on the ETF yet or not?
Funny you asked that. They just listed like a day or two ago.
Yep.
And those you could drive a truck through those markets. They're like $5 wide.
Come on.
Because who wants to trade? You're a maniac if you're trading that.
It's illiquidity on top of illiquidity.
So the note to self and to the retail trading public who can't buy a bid and sell an offer, probably don't go near this product. It's nice to understand it, but probably don't go near it yet.
Well, that said, I actually think I would not trade options on it. I think I'm looking at the markets right now. The like October 20th, which is the nearest weekly, the 19 strike is no bid at 30. That's okay. The at the money put is $0 to $1. Everything else is $5 wide.
Wow. Yeah, you can't get anything done there.
There's
no way. So then you're left with buying or selling the actual ETF itself, right?
Which can be reasonable, right? Like granted, this is such a very short time frame. I think they probably had like 18 trading days or something like that, like 17, 19 trading days since they launched. So far from like a sample, but they're beating the NASDAQ right now. I mean, I think it's an interesting demonstration of just how much premium you're collecting in that 0 DTE at the money, that it cushions even some of these 150, 180 bips moves we've seen in the NDX.
Yeah. So you said earlier, the NDX is, or I guess the NASDAQ is down 3-ish%, and this fund is only down 1%. Was that accurate? Were those right?
That was as of the end of September.
Okay, I gotcha. Okay. But we saw some pressure on the NASDAQ along the way. So that's not horrible for what the strategy is. It's a cash secured gigantic put. That's pretty much it. What they have a little bit of treasury built into this as well. Right.
It's 60% of your cash, or sorry, 40% of your cash, 60% is in cash, 40% is in bonds. You're getting a tailwind of like 5 and change percent on. I think they have some 3-month treasuries and some 1-year treasuries.
There's got to be some fatty
cash
tails
gets deployed every day, right?
Yeah.
Sorry, cash gets from the premium they're collecting, you're saying.
Yeah.
Exactly.
So I think that when the NASDAQ is dropping, this should outperform because you're collecting premium but pacing the NASDAQ as it drops, right? But if it goes up, that's when you're losing. So if
you're not performing as
that
well.
55 delta significantly more than the premium that they collect, that's when you're losing on this, as opposed to just NASDAQ, right?
Yes. And like what I always say about short put strategies is they're not about theta, they're about delta. That
Right.
like if people love to think that this is like a premium data collection strategy and that's where you're making money, you're making money because you're long 15 NASDAQ deltas through short, per put you're short.
But you do there's a little theta component to it, right? There's got to be. If you're selling premium like this and the market wafts, meaning it kind of wiggles in between a zone. So this is, having been short this premium is good for you, right? In that example. No?
Yeah. I mean, I think they collect somewhere between 65 and 75 bips of premium every day. I mean, that gives you 70 bips on the downside. So, NASDAQ's down 1.5%. Like it feels like blood in the streets. It's like, okay, you're only wearing half that loss.
Yeah.
On the other hand, to Jason's point, like if we do see 150 bips rally, you only made 70 bips on that day.
That's right. Yeah. Your upside is sort of capped with the strategy, right? What about any fatty tails we're missing here? I mean, it's got big moves that go beyond. The downside's probably not so great once you get beyond a couple standard deviations.
Well, I think the downside. So I'm comparing this to just investing in QQQ. The downside, you lose money, but you're pacing QQQ if that's what you want to be invested in the NASDAQ. Right. I think the big fat tail's in the upside. Because, you could sit there and NASDAQ can rally, 300-400 points or whatever, and you're missing out when you're on QQQY instead, as opposed to just QQQ. So right. I think that's where the big gaps will happen, is if we rally a lot.
All right. You ready for this?
Mm-hmm.
Having said that, we can make a seagull with 2 different products. So you can, get your purchase value of the QQQY, which is selling a big fat put.
You can't, because then you're selling a naked call. Did I freeze?
No, I think Lex might have frozen.
Oh, Lex froze. Oh, holy cow.
Wow. No, this is like ring around the
ring around the bad internet.
What the heck? We had an internet
sitting there proposing I guess buying QQQY, but then doing a seagull on QQQ because of the illiquidity of the options on QQQY. You get me Tradier to sell a naked call on QQQ, and I'll do that.
Yeah, the naked part is the tough part. Don't sell naked options.
Nope.
I learned that lesson. I learned that lesson the hard way.
Oh, now he's getting a spinny circle.
Oh man, yeah, we totally lost him.
He didn't even get the spinny circle. Ruben had to ban him. No, I think it's an interesting product. I think the fact that its dividend yield, what was it, like last month's dividend yield was already 5% or something like that, right?
I don't know.
Correct. So
internet,
hey, welcome back.
Yeah, we're having internet problems across the board here. This is weird, and we're in different parts of the country. Even weird. Jason's the only one who's stable. That's what you get.
Whoa!
That's what you get in Appalachia.
Earlier in the show, that was the opposite.
Right.
Yes, you're right. They paid $1.10 dividend after 10 trading days in September.
Yeah.
So that's a serious chunk of change. And I think that's where they could get caught up, right? If you're paying dividends when it's good. And then the other point that I was going to make about to compound the sort of upside, right, that you're missing out on the upside, you're also resetting at higher levels every day, effectively, by selling that put as we go up. Not only are you missing on the upside, but you're resetting to capture every bit of downside at each of those progressive highs.
Right.
Yes.
Right. Wow, interesting. So are you, Mark, is this going to be part of the portfolio? Are you going to follow this a bit or trade it? What are you thinking?
I'm following it because it's fascinating, and I'm enthralled by their ability to just consistently, like I said, after 19 trading days, like beating the NASDAQ by just selling fat puts. Not what I would or what I typically think of as like the cash secured put strategy.
Yep.
I've also been tracking it from a NAV perspective to see how closely the fund tracks the actual holdings, because the holdings are pretty simple, right? It's a NASDAQ put and 2 bonds.
Yep.
And there's consistently like a 15 to 20 basis point premium on it.
Right.
To NAV, which I think is fairly common. I don't do a lot of this, but like I think that's fairly common.
Right. Interesting product. So it's super actively managed. It has to be. They're doing this every single day, right?
I wouldn't be surprised.
Well, Mark's turn.
I mean, these don't look like flex trades. They look like I see them open interest. I know some of the other big funds will typically do like a flex trade with a single counterparty.
Yeah, I mean, this is a total, until there's some liquidity if they ever get it. This is a total setup play, right? I mean, they have to make a few phone calls to the sellers of these puts and say, hey, what are you thinking? Here's where we want to do these. We've got 20,000 to do.
Yeah, there's got to be like a deal or something, right?
Oh, they have to shop this to death, I would think. What about
but right now they're only 48 puts. Like a $50 million fund only needs to sell 48 puts. So they have to get real big before they're getting like dangerous.
That's true. That's a good point. What do you think Susquehanna does with these? The other side of it. They're long this junk.
NQ.
They tell their lowest level clerk to deal with the 400K of premium, and Yas never hears about it.
Wait, did you just say sort of that it's a rounding error?
Yes.
That's a good point. It's a rounding error. Yeah, they're not actually. Goes into the.
If he puts an NDX is like that's their intern's job.
Yeah.
Right. I gotcha. Okay, interesting. I'm gonna keep some eyes on this one. I want to see what this is. What's the price of the ETF roughly?
Like $20 right now, 19 even.
And it paid $1.10 dividend the other day.
Yeah, at the end of September. Yeah, it launched at 20. 10 days later, it was trading 18.60 after a $1.10 dividend.
Yeah, that's a 60% yield.
Wow. So,
yep.
And
it's funny they have that on their website with a couple asterisks, but they do have the 60% because that's
that's what it was.
$1.10 times 12
on pace.
Yep.
And then what about so yeah, that's amazing. So are they paying this dividend every quarter, or is it going to be more frequently than that?
Every month they're going to be paying it.
A monthly dividend of $1.10.
Well, they redeclare. They'll declare like
it's different. It's going to be different every month.
Yeah, exactly.
God, that's insanity. Holy.
Which will prevent any kind of liquidity in the options.
True.
That's a good point.
Yeah, and plus you're not going to know what the dividend is, right? When you have to price options necessarily. You're just
that's what I'm saying. That's why it'll stay wide no matter what.
Yeah,
even
it's
if you
get
get
a tough one.
Kind of ton of traffic in the options, they're gonna have to stay wide.
I could get myself, if I were market making in this, I could get myself in trouble.
Oh, it's like it's like a bet on the path dependence of NDX as much as anything.
Yeah.
Interesting. All right, cool. What else is going on? We have a couple minutes. Jason, any new levels in Volen that we should know about? So let me just say before you answer, hold on. I looked at 4,200. I looked at 4,225. I looked at 4,250. Back when it was down there, and we had talked about those levels, and I don't remember exactly which level it was, a week or so ago, but it kind of bounced off there pretty good. When it looked like the market was going to zero at one point, I thought, and then all of a sudden we settled around 4,200 ish, and then started moving north. So I don't know if you had that metric.
Lex is hilariously frozen right now.
Oh no, I see him. I heard him.
I'm back.
So. I mean, back when we were down at like that 4230, 4250 area, implied volatility was going up, but we were going down kind of, crawling down and supposed to going down sharp. And, the historical volatility wasn't rising. And this was back when, the Bank of Japan was threatening to appreciate the yen. And we also had the FOMC higher for longer meeting. So, I mean, there was some threats and there were some puts being bought, particularly at 4,000 for October for this OPEX in 2 weeks, or I guess a week and a half now. So there, you know, there was a lot of hedging going on. And so I knew that at some point in time we were going to bounce. And as long as we passed 4,300, we would get pretty quickly up to 4,400, which I guess we're close to now.
Right at.
But after we pass 4,400, we're going to slow down because there's a really, I guess somebody did like a very strong call vertical where 4,400 was a sold level. So I think like right there, we'll slow down once we pass that.
Okay.
So I'm thinking like, you know, somewhere between 44.25 to 44.50 will be kind of like a toppy area for SPX.
Right. Okay.
I've been saying 44.50 for a while now. So I think that's like where we'll go. The other thing too is historical volatility has ticked up. I mean, we've been making 1% moves now on the regular, both down and up.
Yep.
And a month ago, it wasn't that much. So we're getting a little bit of base effect on the historical volatility.
What about has implied followed, or was it already higher by a good bit?
Implied was about 6-7 points higher than historical when we started, and now we're at about 3.
Right.
So our current Vanna is looking at about like 25 to 26 billion for every point in implied volatility movement.
It sounds like,
you know, actually one thing to talk about, Mark, at some point is I've started doing some Vanna hedging studies, and it looks like 25 billion gets you 1% in SPX. I remember we were talking before that you were saying like 1 billion gets you 10 points. Right?
Yeah.
Mark?
I don't recall. I think I'd have to refresh myself on what the my rule of thumb is usually like it only takes a couple percentage points, like 1, 2, 3 single digit percentage points to nudge the volume in some direction at the end of the day.
Yeah.
Materially.
Yeah.
So yeah, I don't know off the top of my head what like.
So our studies are showing that it takes a lot more.
Yeah.
Okay.
So
at one point in time, you were telling me. I mean, I remember, and it may have been off camera or whatever, but how you were saying that the rule of thumb when you guys were on the floor was that 1 billion of buying creates 10-point move in SPX, or selling creates 10 points down. It looks like 25 billion is like a 1% move on average. And
is that
as far as like,
sorry, Jason, is that 25 billion in Vanna or something else in Delta hedging?
Vanna hedging.
Okay.
For every point in VIX. So, but that it takes 25 billion in implied volatility hedging to get up 1%. So it might take more than 1 billion to move 10 points in SPX.
Yeah.
Probably takes like 1 billion probably moves you like 4 or 5 points now.
How often do you see a $25 billion number in Vanna in SPX?
We have it now.
I know.
Until we pass 4,400. Right now, our aggregate Vanna is at 25 billion. So 1 point in VIX movement should create a 1% move in SPX, which is what we got yesterday, right?
Yeah, that's right. Interesting.
Well, that actually jibes, I think, because I don't know that I ever had like a point rule, but like if there's 25 billion of buying, that should be roughly like 3% of E-mini volume on a given day. So like if you're 3% of E-mini volume marginally buying, right? Like assume everything else is noise and this is distinctly buy on that day, for that to move the market as a tailwind 1%, I think that sounds right.
Yeah. I mean, it's basically that essentially like is what we found. Like I think it was on you guys. I was using the 1 billion for 10 point as like a rule of thumb, but it turns out it's 1 billion is like more like 4 points, 5 points. But I guess it jives with your 3% rule. So yeah, right now we're at 25 billion, but that 4,400 is a very strong positive Vanna strike. So if we pass it and it reduces and then turns negative, that's why I think 44.50 will slow down after we pass 4,400.
Yeah. Okay. What's a few billion among friends anyway?
Well, like if some rebalancer is coming in at the end of the month, it's nothing, right? Like it could completely get swamped by some, other non-options related flow.
Right.
So or if the options related quiet flow, and that's noise, then that'll drive the market. Yeah.
Right.
Yeah, like when I'm done, I have my own like white paper that I'm making based on this data, but when we release it, I'll start talking about a lot of like the bullet point conclusions that we have at the end.
Okay.
So
cool. One last thing before we go, and we have to do it quick.
Okay.
Jason, you asked us about the market maker handbook or something like that, or give us just set that up. Well, maybe we'll talk about that next time. What were you trying to get at with that?
Oh no, it's just I mean, we here, and I know, even though I never did it myself, is how market makers hedge their option book position. And I asked that question on email mainly so that I have a reference for the white paper that I'm writing.
I got you.
To say, hey, here's something. I'm a very proof oriented kind of person. Like, hey, if you're saying this, can you prove it to me? So I think Mark was saying how Ewan Sinclair, and who writes great books, particularly for beginners, but great books on options trading, just kind of references dealer best practices without like a real book. But I knew it was a long shot asking you guys for that. I figured if you were allowed to give it to me, you probably already used it as fire, in the fireplace. So
I think the market maker hedging rule book or handbook probably has matured since since I was on the floor, especially because it's so firm centric now, right? If you're just an individual market maker, like we sort of were, we work for firms, Mark and I, but I think it's probably changed a good bit nowadays. I don't think the general theme behind their hedging strategy has changed a ton, but I think how often they do it and when they do it and why they do it might be a little bit different now.
Absolutely. I was just really looking for something high level that I can reference, that I can put in the bibliography to say, hey, here's proving. And it was kind of like the general, hey, these are the tools to use to hedge your book. So I mean, really, I knew it was a long shot to even get it. And as Mark responded, it's gonna cost a lot more than a few upticks. So it was like, oh yeah. I knew I was going to get that response, but that is one case. Why not try?
That is one case of good Bordeaux.
I'll pay that.
I'll pay that. There you go. Well, you might not say that.
Yeah, be careful. I got a couple of years in mind.
Yeah.
Well, no, I'm just saying, like, I mean, that kind of handbook would be pretty valuable.
Oh yeah, I like it.
Well, it's like finding a fraternity's like code book or something.
That's right. Yeah. That's right. We'll chat about that. All right, guys. Good deal. Let's cut it there. We'll stop there. You guys have a great day and rest of the week. We'll be back on again next Thursday. Not even sure the topic yet. I got an idea though.
Oh boy.
Yes. Oh boy.
Anything else? It looks like they're going to skate again.
Thursday is my wife's birthday, so we have to sing happy birthday to her next Thursday.
Perfect. All right, guys. Have a good rest of the week and good day. I'm going to be watching this QQQY for a little bit, see what's going on there.
All right.
Good deal. Talk to you. Bye.
Happy trading.